Want to bring in our economic experts to discuss. David Nelson's with us, along with Melissa Armo, and Ford O'Connell is back with us. David, let me start with you. You know, the Nasdaq's at a new all-time high. The Russell 2000's at a new all-time high. And we're seeing, like today, I said the stock of the day was Winnebago, right? Because it is. I mean, this is a discretionary item. No one needs an RV, but they had record revenue and record earnings. We're clicking on all cylinders.
We are, and our economy, speaks to that, and it's playing out in real time in the markets. And you hit on the most important point, which is the Russell 2000 at an all-time high. That's domestic revenue. These are small companies right here in the United States. That speaks to that small business optimism that you're talking about, where 95% are pretty positive on the economy. The S&P 500, on the other hand, about 40% of the revenue is overseas. So I'm really encouraged by what I see in the economic data right here at home.
What about you, Melissa?
Well, as I've been talking to you about, the S&P is lagging. I really think that's due to the banks. But overall, these companies, manufacturing companies, bigger companies, it's the tax cuts. Everyone is taking advantage of the tax cuts, and they're showing and they're improving. And it's making people feel like they want to go out. They want to spend money. They want to buy these discretionary goods. They don't necessarily need a Winnebago, but they're going out and buying one.
Do you think that do you think this momentum is sustainable? I mean, do you think there's anything that can derail what we're seeing right now?
Yes. The problem is what's going on with tariffs. I don't think in the long term it's going to affect us in a negative way, but I think right now in the short term for the summer, every time the market does not like tariffs. The market loves Trump, but the market doesn't like tariffs.
Although we have seen the Nasdaq again at an all-time high today. We saw the Russell 2000 at an all-time high. I think maybe the Dow Jones Industrial Average Ford doesn't like tariffs because those are your globalist names that make a majority of their profits from overseas. But when you start talking about America as sort of an island, all right, not isolationist, but sort of an island of economic growth, there's nothing comparable to it right now I see on the planet.
No, I think you're absolutely right, Charles. And look, the economic optimism around the country is beyond palpable, and it is largely due to the Trump tax cuts. I would say at this moment, though, it's probably even more due to the significant deregulation of the Trump administration. Look at manufacturers alone. They have the highest outlook in terms of capital spending and growth in the last 20 years, and we've created 300,000 jobs just in that sector since Trump has been in office. So overall, things are good, and I think what we need to realize is that good economic tides, at least in terms of voters, tends to raise all ships when we're looking at historic unemployment lows among blacks, Hispanics, and Asians.
Yeah, 374,000 manufacturing jobs since January of last year. So let's turn to the market for a moment because we're only a week or so away from earnings season. We've got some trends that are moving this market. Momentum, obviously. Hot stocks remain hot. We see consumer discretionary names. Those are doing extraordinarily well. Buybacks after the close, HP, a $4 billion buyback. Merger mania, you see what's happening with Fox's entertainment assets. Are these enough? Also, are these going to continue? And do you need more to keep this market going?
I think we need more for the market. The economy isn't the issue, but the fact that so much money is crowding into just a handful of names, that concerns me a bit because it's very reminiscent of the Nifty 50 when you see that kind of crowd. Those are the consumer staples of our time. The Amazons, the Facebooks, the Googles. They're replacing the Procter & Gamble's, the Cokes of yesteryear. These are the new names, right. And this is where people are going to hide. That concerns me a bit.
The Nifty 50 of the 1970s, that's where you put widows and orphans money, but they went from value to overvalue, to your point. Can we become too optimistic? Is that something we should be concerned about?
No, optimism is great. I would just be cautious. It's cautiously optimistic is the best advice I'd give people.
Going into earnings season, what are you looking at today after the close? Micron had a real strong number, strong guidance. Stock initially went down, it's turning higher. Obviously, if a company misses, it's going to be punished. But will enough companies beat to justify this rally?
I think it's going to be an exciting earnings season because, again, we're going to get into the fall. I think the fall is looking great for the economy. Fall is looking great for the market. So if companies perform and they really shoot up, remember last earnings season, companies had these amazing earnings and then they dropped like rocks. Look for this next quarter to be much different.
Was that the expectations game, though?
It is.
Yeah, that was the expectations game. I mean, 8% on revenue, 26% on earnings, one of the best quarters in the history of the markets. Melissa, David, Ford, thank you all very much.